Hello, personal finance. All right, so today we are going to be talking about insurance, and please understand that I'm going to try to take a fairly long unit, and I'm going to try to shorten that up. I'm going to try to hit the key points that I find most relevant and important for you moving on and moving forward after this class. So basically what I usually do with this is I use several different resources. Some of it's Ramsey, some of it's Next Generation, Personal Finance, some of the things like that, and I have it all kind of put together. But there's seven main types of insurance that I like to talk about with this, and so the way that I'm going to do this is I'm going to explain what each one is, give you the financial risk that's covered, and then I'm going to explain what stage of your life that you're going to need this insurance. So what I would like you to do, the first assignment, you're going to have two assignments with insurance. The first one is going to be just to create a basic table explaining what I'm telling you right now, and just put it onto one sheet and then submit that. After I go through each part of that, what I'm going to do is just kind of go through some keywords off of this packet. This video should be fairly short, definitely less than 10 minutes long in length. I'm going to try and shorten that up. The last part of it, I'm going to talk about what the other assignment is that you're going to be able to do. And I will also share with you or put on Canvas the auto insurance slides that I generally show in my class. So I'm going to share that with you as well. All right, so here we go. So here's what you'll need to know. 7 types of insurance. They are going to start with homeowners and renters. That is number 1, homeowners and renters. So the financial risk that's covered with this is going to be the value of home furnishings and personal items. So anything that's inside of your house, your apartment, that type of thing, whether you're renting it or owning it, that's what's going to be covered with this type of insurance. Really, really important to understand and to have and to know. If you buy a house, you have a loan, you're going to have homeowners insurance. If you rent an apartment, rent a house, it's not necessarily guaranteed unless the person that you're renting from tells you that you have to have it. Now, renter's insurance is very, very inexpensive, probably less than $10 a month. Okay, so you could be out a lot of money if you don't have it and somebody vandalizes, steals, or there's a storm, fire, that type of thing. Okay, stage of your life that you need it, as soon as you move out of your parents' house or wherever you're currently living, as soon as you move out of that place, you need to look into getting renter's insurance. Okay. Next one, number 2, is going to be auto. Auto insurance, this is the cost of financial risk that's covered. It's the cost of damages to your vehicle, liability, and medical in the event of an accident or other event that damages your vehicle in some way. Okay, anything that could happen. I'm going to break that one up a little bit more in the auto slides that I send you because there's a few different ones: full coverage, liability, comprehensive, and collision. And you'll understand a little bit more about that. That's a super important one that I want you to know and understand, because when you go out to purchase auto insurance, I want you to know what you need to get. Okay? Stage of your life that you need it, you guessed it, as soon as you buy a car. Okay, so that's going to be when you need auto insurance. Next type is going to be health insurance. Hot topic, over the last 8-10 years about health insurance, and so you can Google that if you want to know a little bit more about what's going on with the healthcare over the years. But that's something that's going to be very, very important to you as well. Financial risk that's covered, all of your medical bills. Okay, so there's a couple of different ways. There's health insurance, and then there's something called HSA, health savings account. That's basically a higher deductible but cheaper premium, meaning less money that you pay per month. And that any of it that you don't use, you can bank up money and create a savings account off of that for healthcare. If you go to the doctor fairly often, you're going to want to stick with your regular health insurance. If you never go to the doctor, never get sick, nothing like that, health savings account is probably going to be better for you because it's less per month, and it does have the higher deductible, which you're not going to really need to get into because you never go to the doctor. Anyways, stage of your life that you need health, always have health insurance. You never know when an accident's going to happen and you could get hurt, that type of thing. You'll always want to have health insurance. Next one, number 4, disability. Disability, the financial risk that's covered is your income in case of an illness or an injury that prevents you from working. Okay, so if you get hurt or something happens, you'll want to have disability insurance because you're going to want to cover these bills that you have when you're not able to work. Stage of your life, when you are established in your career and when you are fully supporting a family. So when you have people that count on your money, your income, you're going to want to have that in some format. Long-term care, you've heard a lot about this in the news if you watch the news at all right now. Long-term care facilities with these outbreaks of the coronavirus. These are nursing homes, assisted living, or in-home care. When do you need this? 60 years old. In Ramsey's materials, he tells people, do not buy it until you turn 60. As soon as you turn 60, you'll want to purchase this type of insurance. Okay. Identity theft protection. This is the cost of hiring someone who has the time and knowledge to clean up a mess. Your identity gets stolen, and it generally costs or takes about 600 hours to fix and to go through. Ways that you can avoid this identity theft is shredding instead of throwing away any information, any papers, anything that has personal information on it of yours. Another way would be to avoid phishing, and that's phishing with a phishing, phishing. Phishing is somebody trying to come in and steal materials, specifically important information to you by email or hacking you and that type of thing. So anytime that you get any kind of information, anything from a bank by email, you'll always want to go back. If it looks a little bit off to you, you're going to want to look at the back side of the email address. So for example, it might say, up at the top where it says a name at bank dot, whatever it is, you'll want to make sure that happens and it says at bank, whatever. That's how you can generally tell that it's a legit email from them. Another way that you could make sure that you kind of protect it would be to check anytime that you put any information in on websites. Make sure that the website is HTTPS, stands for security. Make sure that that's put in there before you put in personal information. Okay, that's another kind of a tip that would help you with that. When do you need it? What stage? After high school. Okay, so after you get out of high school, you want to look into getting something like that. Last one that I want to talk about is life insurance. This replaces the lost income in the event of your death for family members relying on it. Okay, so that's the risk that is covered. Now, what stage of your life do you need it? When you have dependents who rely on your income until you become self-insured. Okay, so when you have people that are relying on your money, again, this is like disability insurance, you're going to want to have life insurance. Okay, there's 2 different types of life insurance, and those are term policies and whole policies. Whole policies might have different names for them and stuff like that. Cash value insurance, universal insurance, stuff like that. That's a whole policy. Okay, so here's the difference between term and whole. A term policy is a set term. Okay, so you think about the president, he has a term of 4 years. Okay, so this is how term policies are for life insurance. They generally last about 20 years, where a whole policy is going to last the entire life, more than likely. Term policies are going to be cheaper, so where you may pay $40 a month for a term policy, you may spend for that same dollar amount, you might spend $300 for whole. Okay, so that's going to be the biggest difference there with the expense and the price. Last part about that with life insurance is term policies are like renting. They run out after a certain amount of time. The whole policies that have the cash value, those are more like owning. So anyways, those are pretty much the key points. A few things. What's the purpose of insurance? It's so that you can keep more of your money, and it's also to transfer the risk to an insurance company. Without it, you could go bankrupt. Bankrupt means that you have no money to pay your bills or do anything else financially. The whole concept, the whole idea is to arm you with information so that you know what you're buying when it comes to insurance. A couple of key words that I want to point out to you. One is deductible. When they talk about a deductible, that is going to be something that you have to pay before you start receiving insurance or their insurance benefits. So, for example, if I have a $250 deductible on a car, and I have $1,000 in damages, I pay that first $250. The insurance company would pick up the other $750 left. Okay, a premium, that just basically means how much money you're going to pay per month. Okay, when we talk about auto insurance, liability is something that gets brought up a lot. Liability insurance, you have to have liability insurance to drive in the state of Iowa. Okay, so make sure that you do that. I've seen how that has been a very, very bad, been on the bad side of how that works when people don't follow the law and don't do what's right, ethically right. Make sure that you have liability insurance when you're driving. Those are pretty much, that kind of sums up what it is, the main points that I want to tell you about with insurance. Now to get on to your kind of bigger assignment, it's called insurance research. And basically what you're going to do is you're going to kind of specialize this one, become an expert in auto insurance. So I want you to research 4 different types of companies. Name of the companies is going to be in it. What type of auto coverage do they have, whether it's liability, full coverage, comprehensive, collision, towing, roadside assistance, anything that you might find on their website. And then do they handle other types of insurance besides just auto? You can note that. And then I put in there, in auto insurance, there's 3 numbers that are represented. For example, I put 50, 100, and 25. I want you to look up and see what that means. I'll give you a clue. It talks about what all is covered under the insurance, okay? And then you can look at some of their commercials. You can attach those in. Here's one interesting factor with the auto insurance right now. A lot of these companies are giving money back to their customers. Most people aren't driving right now. I think over the last 6-7 weeks, I've probably driven about 400 miles, or less, over the last 2 months. And so, that's going to play a big impact on, not having cars on the road. They're not as risky or likely to get into an accident. Okay, so I want you to take a look at that too and see what insurance companies may be paying back some money to their customers. So that pretty much summarizes for our insurance this week. If you have any questions, please feel free to reach out. And I look forward to doing video number 2 next week for you. And we'll get into another topic. Thank you.